Hello and welcome back for another Agix price prediction update, and in this video I'll be diving deep into the technical analysis here on the Agix chart. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Agix is holding below the 20-day MA here on the 4-hour chart, which is now acting as a resistance. And you can also see that after seeing our chart pattern, which was a double bottom, giving us a breakout to the upside, whose minimum target areas at around the $0.29 mark we fully maximized, and also seeing a breakout out of this ascending channel to the upper side in a move that gave us a high at around the $0.32534 mark. We had been seeing a bit of a bearish movement over here, that is this pullback to the lower side, and that was first signaled by these long wicks that we printed on the charts, which was the first indication that the sellers were trying to gain momentum and the buyers were now losing it. And afterwards you can see that we have been seeing a bit of a pullback to the lower side in a move that has now given us a low at around the $0.26 mark. And this move to the upside, I have been terming it as an Elliot wave structure to the upside, where we peaked in that first wave to the upside, and whatever we have been seeing was a corrective structure in the formation of this wave 2. And using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was able to get a minimum retracement area for that wave 2 between the fib level 0.5 and the fib level 0.78, an area that lies between the $0.27651 mark and the $0.24844 mark. And you can see that at the time of this recording, we have managed to get into that minimum retracement area in the formation of this wave 2, and there are high chances that Agix is now just about to give us a turnaround to the upper side in what could be the start of the formation of this wave 3. And in case we see a reaction of this golden pocket between the fib level 0.5 and the fib level 0.618, there are chances that we are going to start gearing up, and the moment we manage to break above the wave 1 high once more at around the $0.3256 mark, that would be enough confirmation of the start of the formation of this wave 3, and giving you minimum target areas for that wave 3, assuming that we are not going to get one more leg down in the formation of this wave 2, by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a minimum target area at the fib level 1.618, and that is at around the $0.42342 mark. And for now, I don't want to confirm that we have seen the low for this second wave, but those will be my target areas once we confirm that the low for that second wave is in the formation of that wave 3 to the upper side. And let's continue watching this minimum retracement area between the $0.27 mark and the $0.24912 mark. And if by any chance we continue seeing further breakdown, and maybe at some point we lose this yellow target area to the lower side, then I'll be expecting our key area of support at around the $0.227 mark to give us support, and expect a turnaround from that area of support. But in case we continue seeing further breakdown, then that would be suggesting an even more bearish scenario, where we could get a low below the low at around the $0.0227 mark. And to understand fully what I mean on that, I can give you my Elliot wave count here on the Agix chart, where you can see that after seeing our lows down here, we saw a 5-wave structure to the upside in a move that gave us a peak at around the $0.67 mark, in what I'm terming as the formation of a larger Elliot wave count 1. Then we saw a corrective structure in the formation of this larger Elliot wave count 2, minimum target areas between the fib level 0.5 and the fib level 0.78, the area highlighted on the charts using this blue target area. And in case we see further breakdown and lose this micro Elliott wave count that I've given you, then that would be suggesting one more leg down within this blue target area in this ABC corrective structure right here, where we can expect one more leg down in that wave C before we can continue gearing up in the formation of this larger Elliott wave count 3. So that is what we can expect here on the Agix chart, and those are the two Elliott wave structures that I'm tracking here on the Agix chart, and I'll be keeping you updated on a daily basis. Also taking a look at the indicators on the RSI, we are trading at around the 40 mark. Also taking a look at the MACD, we have been able to print a bearish cross suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.